EPK Capital presents Deep Dive on Starbucks. Hey everyone, and welcome back to the EPK Capital's channel. I am your AI host, Ritika. If you're anything like me, your day probably doesn't truly start until you've had that first glorious sip of, well, you know. That iconic green logo, the comforting aroma, the slightly intimidating secret menu. We're talking about Starbucks. But today we're not just savoring the latte, we're dissecting the stock. Is Starbucks a frothy investment opportunity or just a whole lot of expensive coffee grounds? Let's dive in. So who exactly is Starbucks beyond our daily caffeine fix? Founded in Seattle in 1971 by Jerry Baldwin, Zev Siegel, and Gordon Bowker, it started as a single store selling roasted coffee beans. Fast forward to October 2025, and Starbucks, NASDAQ SBUX, is a global behemoth, boasting over 38,000 stores across 84 countries. Think about that for a second. That's a lot of espresso machines. While the founders have long since moved on, the company is currently led by CEO Laxman Narasimhan, who took the reins in March 2023. The institutional ownership is quite diverse, with major players like Vanguard, BlackRock, and State Street holding significant stakes. So it's not really about one promoter group in the traditional sense, but rather a widely held public company. Financial metrics over a 10-year period. All right, let's get down to the numbers because that's where the real story often lies. We're looking at Starbucks' financial performance over the last decade, up to October 2025. Starbucks has consistently brewed up impressive revenue growth. Over the past 10 years, we've seen an average annual revenue growth rate of roughly 8 to 10%. In fiscal year 2024, for example, their net revenue hit approximately $38.7 billion, a solid increase from previous years. This shows their ability to expand globally and grow same-store sales. When it comes to the bottom line, Starbucks has generally maintained healthy profit margins. Their operating margin typically hovers around 15 to 18%, and net profit margins are often in the 12 to 14% range. This indicates efficient operations and strong pricing power. We've seen EPS grow from around $1.90 in fiscal year 2015 to an estimated $3.60 to $3.80 for fiscal year 2025. That's a strong upward trend, albeit with some fluctuations due to global events. Now, no company is perfect. Starbucks does carry a significant amount of debt, with long-term debt currently sitting at around $14 to $15 billion. While this is manageable for a company of its size and cash flow, it's definitely something to keep an eye on. Their debt-to-equity ratio is around 1.5x to 2x, which is a bit higher than some might prefer, but typical for large capital-intensive businesses. Technical charts and indicators. Let's switch gears and look at what the stock chart tells us. Because sometimes, the market sentiment is as important as the balance sheet. Looking at the long-term chart for SBUX, it's been a fantastic ride for early investors. Over the past decade, the stock has shown a strong upward trend, delivering average annual returns well into the double digits. Historically, the $85 to $90 range has acted as a strong support level. If the stock dips, this is often where buyers step in. The $105 to $110 zone has frequently been a point of resistance, where the stock struggles to break higher. Breaking through this consistently would signal significant bullish momentum. As of October 2025, SBUX is trading in the range of $98 to $102. The RSI, a momentum indicator, generally oscillates between 30 and 70. When it's below 30, it suggests the stock might be oversold, and above 70, potentially overbought. Currently, the RSI is hovering around 55 to 60, suggesting it's neither extremely overbought nor oversold. Pretty neutral territory. The 200-day moving average is generally trending upwards, indicating a healthy long-term trend. The stock is currently trading slightly above its 50-day moving average, suggesting some recent positive momentum. Benjamin Graham Valuation. Now for the fun part for all you value investors out there. Let's channel our inner Benjamin Graham and see what the godfather of value investing might say about Starbucks in October 2025. Graham's philosophy is all about intrinsic value. A simplified version of his formula for growth stocks suggests V equals EPS times open parenthesis 8.5 plus 2 G close parenthesis. Let's plug in some conservative numbers for Starbucks as of October 2025. Estimated EPS for fiscal year 2025. Let's use a conservative $3.70. Expected growth rate, G. Given its size, let's estimate a moderate future growth rate of 7% annually for the next 7 years, so we get $83.25. With the stock currently trading around $98 to $102, our simplified Benjamin Graham calculation suggests that Starbucks is currently looking a bit overvalued by about 15 to 20%. Remember, this is a simplified calculation, and value investing involves much deeper analysis, but it gives us a good starting point. It implies that at its current price, a significant portion of future growth is already baked in. The bull and the bear case. So, is Starbucks a buy, a sell, or a hold? Let's weigh the pros and cons. The bull case versus the bear case. The bull case, pros. Starbucks has an undeniable global brand presence and incredible customer loyalty. People don't just buy coffee, they buy the Starbucks experience. This creates a strong competitive moat. They continue to innovate with new menu items, drive-through models, and digital ordering, constantly adapting to consumer preferences. Their expansion into new international markets, particularly in Asia, offers significant growth runways. The business generates substantial free cash flow, which can be used for dividends, share buybacks, and further investment. All good for shareholders. Due to its brand strength, Starbucks often has the ability to pass on rising costs to consumers without significant loss of demand. Their rewards program and mobile app are industry-leading, driving engagement and customer retention. The bear case, cons. As our Benjamin Graham analysis suggested, the stock is not exactly cheap. The current price might already reflect much of its future growth potential, leaving less upside. The coffee market is fiercely competitive. From local artisanal cafes to McDonald's, everyone wants a piece of the pie, or latte. Rising labor costs, bean prices, and supply chain disruptions can squeeze profit margins. While they have pricing power, there's a limit. A significant portion of Starbucks' future growth is tied to the Chinese market. Any economic slowdown or geopolitical tensions there could impact their performance. Ongoing unionization efforts in various stores could lead to higher labor costs and potential operational challenges. Important checks. Starbucks, like any large global company, has faced its share of controversies. Historically, issues around ethical sourcing, labor practices, and even customer service incidents have popped up. More recently, the ongoing debate around unionization efforts has been a notable point of contention, leading to some negative headlines and legal battles with the National Labor Relations Board. These aren't necessarily long-term stock drivers, but they are important to be aware of from an ESG, environmental, social, governance perspective. Despite the competition, Starbucks remains the undisputed global leader in the premium coffee market. Its brand recognition, scale, and established supply chain give it a significant advantage. It's essentially woven into the fabric of daily life for millions worldwide. Conclusion and disclaimer. So there you have it, a deep dive into Starbucks stock as of October 2025. We've seen a company with a strong brand, consistent growth, and global dominance, but also one that's currently trading at a premium valuation with its own set of challenges. Remember, this video is for informational and entertainment purposes only and is not financial advice. Investing in the stock market carries risks, and you could lose money. Always do your own thorough research, consider your personal financial situation, and consult with a qualified financial advisor before making any investment decisions. If you enjoyed this analysis, hit that like button, subscribe for more deep dives, and let me know in the comments below. Are you bullish or bearish on Starbucks? What's your favorite Starbucks drink?